Hello and welcome to WSB Newsflash. Tonight we have a story about change on Wall Street. For far too long we know that the world of finance has had a very difficult task trying to juggle between being degens on a Bloomberg terminal and trying to make it sound and look as if they're doing fancy shit with big words. Well, just recently AMC decided to do something to make their job even harder.
We actually think the creation of APEs, which is short for AMC Preferred Equity, preferred shares, preferred stock. We think this is one of the most important developments of the entire year 2020-22.
That's right. One of the biggest events of the year 2020-22, AMC creates APEs, these equity units, shares, stocks. I have to admit, though, that not only is it big news for AMC, but it's actually pretty big news for the world of finance. To understand why, let's get a quick primer on what shares mean with a publicly traded company and how they interact with the CEO.
A share of stock represents ownership in a corporation. A corporation that is publicly held is owned by hundreds or even thousands of shareholders, but actively managed and controlled by managers. These managers should act for the interest of the shareholders. The big question will be, how can you satisfy all these shareholders when they are different from each other? Well, there's good news. The good news is that all these shareholders have one thing in common. They all want to be richer.
Tendies. He should have just said tendies. Although I have to give him props for that because that was the only explainer video that I found that was actually somewhat honest about the purpose of these companies. But you get the gist. You have a company and it has a business model. It sells things, it makes a profit, or has got a good plan, good management. The idea is shareholders go on there, the shares go up relative to the company's performance, and they get richer. And for the past few years, AMC has actually been struggling with this.
Astronomical level of debt. AMC embarked on a huge acquisition spree right before, unfortunately, everything shut down, and it's still dealing with the fallout of that.
To be exact, $5 billion in debt, give or take a few hundred million.
When AMC does investments like buying a gold mine, some of the lenders and other fundamental analysts say maybe that money should have gone towards paying down debt.
Or maybe they'll own an actual gold mine with which to pay their debt. Did they think about that? Now, in all seriousness, why is that a problem? Because AMC relies on making money in order to make their payments on the debt. If they can't make their payments on the debt, they go insolvent and they go bankrupt, and the shareholders don't get rich. As you know, during the quarantine, there was not a lot of moviegoers, but AMC survived nevertheless.
One of the reasons why AMC survived the pandemic is because we raised over $2 billion of equity. We did it by selling shares, and we basically sold every share that we had. If we needed to raise money in the future, if we wanted to raise money in the future, that was not an option that was available to AMC Entertainment.
This just means that AMC owns shares in its own company. It's pretty common for that to happen. They keep it in the treasury, and they sold it all. They raised the money, they paid the debts, they survived the pandemic, and they were left with no more shares with which to raise money and limiting their options severely. One simple yet unpopular solution for this type of problem is to issue additional shares. What this means is basically just printing additional shares in much the same way that the Fed prints additional money. And in much the same way, the value of the shares goes down or they become diluted. So I'm going to use a deck of cards here as I explain this. Let's suppose that we have a company and you have two people, each with one share. You combine all the shares and each represents an equal percentage of the company. In this case, each share is worth 50%. If I were to magically print a third share, then each share would now represent 33% of the company. This is a concept known as dilution, and therefore it's unpopular. Now, this is a catch-22 because on one hand, they're printing more shares or printing more money with which to service their debt and survive. But on the other hand, they're making the shares worth less money and making their shareholders less rich. There's an additional catch to it, which is the shareholders themselves actually have to approve this measure.
Earlier this year, your shareholders said they didn't want you to issue more common shares.
It was my opinion, my decision. I pulled the vote.
Yeah, so that's not an option anymore. But what about going back to fundamentals and running a profitable company and using the profits to pay for the debts? Therefore, you have a promising future and your shareholders will be happy because the price goes up.
Just last weekend, AMC beat pre-pandemic revenue for the same weekend by more than 15%. Okay, 2019, They just beat it by more than 15%. Those numbers for the box office are going in the right direction. The stock is not. It's down more than 50% year to date, just as things are improving. What's wrong with the narrative here?
Well, you know, it's my job more to run the company than to run the stock.
This guy's getting trolled on live TV, but he did recover quite graciously. Anyways, AMC did recover and actually did better than they did before the pandemic, and the shares aren't going up, and it's gotta suck to be on TV when the shares are down.
We've been talking about your stock all morning long. It was momentarily halted. What's it like on a day like this for you where your stock gets halted and you see the stock ripping higher?
Just another day in paradise, Brian.
And with that, I think he convinced himself that his new job was to make the stocks go up. I can just imagine him going back to the office and just staring at charts all day long until he found some type of a pattern.
We've proven that back in January of 2021, when we were issuing shares, our share price went up. Back in May and June, when we issued shares, our share price went up. When we stopped issuing shares in July of 2021, our share price started a gradual decline.
You're goddamn right. Adam Aaron found a pattern. And the holy grail at that, right? He gets to print more shares or issue more shares, and the stock price goes up. He makes the shareholders rich, and he's done his job. Plus, he's got money in the piggy bank to pay the debts. So why doesn't he do this? Oh, that's right. He doesn't have permission. So what does Adam Aaron do at this point? He goes back and comes up with one of the most brilliant pieces of financial ingenuity that I've ever seen. Something that would make SoftBank jealous.
You've decided, somewhat chimerical, to give something special to shareholders, which includes a great deal of APEs.
AMC's new preferred equity unit, also the acronym is known as APEs.
AMC giving shareholders a special dividend called APE.
He gave people apes. Suck it, Adam Smith. Like, what are the Keynesians at? Hell, I think Karl Marx is probably rolling over on his grave right now. He managed to get anchors on TV to all say apes at the same time and simultaneously destroy efficient market hypothesis. Anyways, what are these apes? Let's get the experts to explain.
Every current AMC shareholder as of last Friday will get one AMC preferred equity unit, also known as APE, and it should begin trading on the New York Stock Exchange today. The special dividend will be convertible into common shares. What we're hearing right now is that your shares will not be diluted. That's what AMC CEO Adam Aaron is promising shareholders as they receive an extra new special dividend they own, all while voting against the issue of new equity at the last shareholder meeting.
All right, so let's go back to the cards. So these are the shares. These are the things he's not allowed to print anymore. So he turns around and comes up with the brilliant plan and say, no, I'm going to print apes. These are going to be blue shares. They have nothing to do with it. They don't dilute. I don't need permission for it. They're convertible, meaning I could pretty much paint over it and add it to the red stack, but nevertheless. It was definitely fun watching the anchor struggling to explain this.
What's the story here? When this first came out, I didn't understand what these APE units really were.
I know, it's a little confusing.
It's not a stock split. It's similar to a split, I guess. Or how does
I would say it means that it sounds very complicated.
Adam, to me, it seemed very much like a stock split.
It's not a stock split, so I'm not even going to bother explaining what that means. Besides, here he is on Jim Cramer's show about to answer.
Jim, it's almost exactly like a stock split.
Boom! Now who's doing the trolling? Seriously, though, what exactly is it?
What we are doing in the creation of preferred equity is we're doing what I guess it's called a stock dividend, but it operates like a stock split, so to speak. In a stock split, if you had a common share, it's split, you got two common shares in a 2-to-1 stock split. In our case, you'll get one preferred APE unit and a common share for the old common share. That just puts apes into circulation in the hands of...
Don't say it! All right, Adam, congratulations. Through this wizardry, through these cheat codes, you managed to fix all your problems. But I bet not everybody's buying the Kool-Aid.
So How will this allow you to walk us through how this allows you to raise cash? Because the first issuance of these shares will be to existing shareholders, correct? So that doesn't raise cash for you.
Boo. Quit spreading FUD. Seriously, what a party pooper.
Apes are a really good omen in the world of meme stocks. So there we go.
There we go. Smash the buy button. Don't you get the point? Wonder how we got this idea in the first place.
Well, we decided to do it because retail shareholders bought control of our company. When I learned, much to my amazement, that 10,000 people were listening to our earnings call via webcast. 10,000 people. Back in the good old days when we were institutionally owned, we didn't have 100 people on our calls. Well, all of a sudden we had 10,000 people on our calls. So it made sense to talk directly to our shareholders in a forum where they were listening.
10,000 people. That's like enough to sell out an entire NFT collection. Come to think of it, that's actually a really good example of it. It's basically an airdrop. An airdrop, for those unfamiliar with it, is a common term in the world of crypto, which I'll explain in a second. But a recent example of this was when this collection of NFTs called the Bored Ape Yacht Club recently airdropped free money in the form of ape coins in the hands, in the wallets of NFT holders.
Airdrops are basically free coins dropped directly into your wallet. It might sound unbelievable, but it's fairly common. Why would anyone give you free coins? There's a few reasons. First and foremost, it's a marketing technique. Giving away free coins is a great way to generate both awareness and excitement for your project. Is there anything that gets people more excited than free money? I can't think of anything. This process can be used to gather valuable information on potential users. Some airdrops will have you fill out a form with your email address, or some might require you to follow them on Twitter. This is immensely valuable to a project's marketers.
I know what you're thinking. Crypto's like magic internet money. There's no way that would work on Wall Street. It's just a big, massive Ponzi pump and dump scheme, right?
What's interesting is he's made his whole career out of loyalty marketing, and he has brought the exact same thing to AMC, but with investors. He's treating them like customers, and he created a loyalty program for investors. And it means that he got all of their email addresses through that process of creating this program, and now he can speak directly to his investors anytime he wants and with no intermediary. So he gets to pump them up and sell them on the stock any time of day he wants, all day long.
Well, true crypto fans are going to know that there's no such thing as an airdrop without botching the rollout.
We are seeing the share price of AMC down. There's two potential reasons. The first one is a lot of shareholders have not received their APE shares in their broker accounts just yet.
And in case you're still not sold on it, Adam came in to close the deal.
And now that we have a new security, a new class of security, that gives AMC the ability to raise capital at will.
Management can pretty much issue new APE shares whenever they want to make acquisitions or pay down debt.
Now, with the creation of this new class of preferred securities, not that we would ever use all 5 billion of them that we could take to market, that would be crazy. But we do essentially have a lot of preferred shares that we can take to market to raise cash, to pay down debt, to use for M&A. And the result of all that is this was a great announcement for AMC. It pretty much takes near-term survival completely off the table.
Well, that's good, because I was beginning to worry without this financial mumbo-jumbo that survival risk was actually going to be a problem. Hold on. What's that? All right, I'm being told they thought of that too.
APE shareholders could stand to benefit, especially in the case of insolvency.
In the event of bankruptcy, the preferred shareholders would have priority over the common shareholders.
All right, so let's get this straight. Through the creation of these apes, he managed to increase shareholder value or make them rich. He respected their decision not to create additional shares and dilute them. He's able to fix the debt problem from all the acquisitions he made. He's able to make new acquisitions, including gold mines. He's eliminated survival risk, and he's actually given these ape shares benefit in case there is survival risk. You should have just called this thing a utility JPEG with a solid roadmap and proven management. How can a company just start minting and selling a bunch of these apes to, well, investors? Brings up a lot of really interesting questions. Is this allowed? Is this supposed to be regulated? Are these things considered commodities or securities? I think as long as he doesn't call them currency, then he's in good shape. I mean, even Warren Buffett knows this.
I mean, you can come up with all kinds of things. We can put up Berkshire coins, or we can put up Berkshire money or anything like that. But we get in trouble, I guess, if we call it money.
To use this new currency, APE, for the benefit of our shareholders.
That's right. Adam does not give a fuck. But what about his fiduciary duties as a CEO, right? Like, this is so much fun. I almost forgot that AMC is a movie theater company.
Overall, his fiduciary duty to these investors is to keep the actual business chugging along and getting the wins and getting the right sort of movies in. How is he performing on the fundamentals in that respect, Eliza?
That's a trick question. We've established that the fiduciary duties is to make the shareholders rich, right? Last time he heard this question, it didn't really go so well.
The stock is not. It's down more than 50%. What's wrong with the narrative here? The stock, which is down 8.25%.
It's my job more to run the company than to run the stock.
That's one thing that crypto got right, is efficiency. These journalists would save a lot of time if they just asked when moon instead of making it sound like they care about all the other stuff.
We are approaching the 5-year anniversary of Mary Barra being CEO of General Motors. The stock has basically been stuck between $33 and $36 a share. So we asked Mary Barra, are you satisfied with your performance?
We focus every day on creating shareholder value.
I think we share the alignment, creating value for all shareholders.
We're going to create shareholder value.
Increase shareholder value.
Shareholder value.
Sorry, I was distracted by the massive chart next to the CEO's face. Seriously, if you actually cared about their performance or on-the-job performance, then why isn't there a picture of a spiced latte or a car next to their faces when they're answering the question? So let's stop being hypocrites and give Adam credit for the bravery that he deserves. He is unapologetically wearing memes on his sleeve like a badge of honor. He figured out an infinite money cheat code so that he can take the stock to the moon and give everybody tendies. This is indeed one of the most important developments of 2022 because Aaron starts a shift in the world of finance, not because he's making money out of thin air. That's nothing new to Wall Street or the Federal Reserve for that matter, but because he's setting a precedent against being disingenuous. He's minting apes and he's buying gold mines. And he's doing his job legally because he's trying to maximize shareholder value.